yet another month has gone by, and that means it's time to look at how my dividend portfolio has performed. So we're going to look at the dividend increases we got this month. Then we'll take a look at the transactions we made, any buys and sells, and dividends we received. And then we'll look at some other portfolio metrics for the month and recent months. And then we'll look at the performance of the portfolio versus the overall stock market, such as the S&P 500. And this month is pretty exciting because it's been 3 years since I started this portfolio in Fidelity. So we'll be able to get some 3-year data from Fidelity that will give us a better understanding of how our portfolio has performed on at least a slightly bit of a longer term time scale. So we're here in my Google Sheets spreadsheet, and the first thing I want to look at is dividend increases. So we did get one dividend increase in the month of October, which was from Lockheed Martin, which was a 5% raise, which isn't super huge, but it's definitely a solid amount that will certainly go towards increasing the dividends that we receive over time, and that will compound into the future. And the portfolio is valued around $6,900 before we make any of the updates, with a dividend income projected around $182. Average 5-year dividend CAGR 7.67%. Looking to get that a little bit closer to 8%, and dividend yield all the way up at 3.29%, which is higher than I typically see. I'm certainly not aiming for anything over 3%, but I think right now the market's just down a little bit, so that's causing the yield to go up. And then this is our concentration by sector, pretty concentrated in tech. And then we also have a fair bit of cash that we're trying to deploy right now as well. So we can go over to Fidelity and get those transactions. So I have those transactions filtered out from October 1st to the 31st. So we can just go here and download all of those transactions as a CSV file. And once that gets downloaded, then we'll go into our spreadsheet and we will import that file. And once I import that file, I can run some scripts that I have, and that will parse all of that data so that we don't have to do it manually, because it's much more fun to write a little script to do it for you than to type everything in yourself. So that should be imported in just a second, and then we can go up here to the scripts and parse the transactions, and it'll run for a few minutes, and we'll come back once that's finished. So the script has finished running, and we can see we deposited $350 like normal. Next month in November, we're actually going to bump that up to $400, and then buys for the month were $428.90, no sells, and then $17.98 of dividends. And we can see right here what we bought for the month. So bought 2 shares of Amcor, just try to average down a little bit. And then mostly our purchases were for Texas Instruments, all the way from around $160 per share down to around $141 per share at the end of the month. So definitely happy to continue buying the stock at the current prices and continuing to average down. And then also some Johnson & Johnson, HPQ, and Procter & Gamble as well. In terms of dividends, we got just a few dividends this month. So 84 cents from Coca-Cola, $2.63 from HP, $3.71 from Leggett & Platt, $1.30 from Cisco, $2.80 from JP Morgan, and then $6.63 of interest on our cash, which is pretty exciting. And for the month, like I said, that's a total of $17.98. And this is just showing us the progression over time, all the way back from March of 2020, just to see the progress. So pretty happy with that. These past 6 months has been kind of a drastic little bump up, and I think that's been kind of because of the fact that we've been contributing more this year to the portfolio and buying more stock. And then also we've been getting a little bit more interest on our cash, since we've had more cash sitting around, and a little bit of a higher interest rates as well on that cash. On the quarter, just $17.98 in the fourth quarter so far. And then for the year, we've received $145 in dividends, which is pretty much double what we received in 2022. And we still have 2 months to go. So that's pretty exciting. The next tab I want to look at here is ticker changes. So if we set the starting and ending dates to October, we have this sorted by performance. So basically in October, Caterpillar was our worst performing stock, down almost 17%. And then Carrier Global, next worst, down 13%. Texas Instruments down 11%, and Pfizer down 10%. And then we had about half of our stocks, a little bit more than half, I think, that were negative for the month. And then some of the best performers were Lockheed Martin, about 11.5%, Southern Company, about 7%, Microsoft, 5%. So Caterpillar was going down throughout the month, and then they dropped, I think an additional 5% on earnings. Right now, like you can see, the price is $226, which is getting closer to what I would be interested in buying more, but I think really I would want to see below $200 before I'm more interested in buying more of Caterpillar. And then we can also look at invested per ticker, and this will give us an idea of the aggregate total that we invested in all the various companies. And we can filter that out to total amount invested, and we can see total amount invested. Amcor was $18, Procter & Gamble $25, HP about $52, Johnson & Johnson about $75, and then the main one that I bought this month was Texas Instruments. Bought a total of 1.727 shares at an average price of $150 for total investment of $259 this month. So pretty excited to continue adding to that Texas Instruments position, especially if the stock, stays around 140 or even goes lower. I'll definitely just keep adding more to the stock. And looking at the value over time charts I have here. So value over time is just the portfolio value. So cool to see just a steady increase there over the past almost 2 years that I've had these charts going. 5-year dividend CAGR. Nice to see that little bump up after last month's updates. Payout ratio pretty steady around 50%, nothing too notable. Dividend income steadily going up over time, getting a little bit closer to $200, which is pretty exciting. And then dividend yield we can see creeping up above 3% in the past month or two, and kind of staying up there just because of the market dropping a little bit, which I have no problem with. But ultimately, I think over time my dividend yield will probably be a little bit lower than 3%. When we're kind of in a normal market cycle, I guess, or maybe like a fair value market type scenario, if that makes any sense. And looking now at the summary page again with all the updates, we can sort here by the total equity to get an updated view of the positions. And now we can see that Texas Instruments is our third largest position at about 7% of the portfolio, above Microsoft and AbbVie now. And as a result, we can see here that tech is about 30% of the portfolio, which some people would probably not be comfortable with. But for me at this point, I really have no problem with that. I feel like, HP and Texas Instruments, those companies are just at good value right now. And I see a lot of promise in the companies in terms of their growth prospects. And I think they're companies that can continue growing at a fairly decent rate and continue growing the dividend at a decent rate. I think Texas Instruments is definitely having some issues over the next year or two, most likely, just because of the market cycle that they're in, but that's kind of expected with their business. So it's really not anything I'm worrying about. And then we can see our income is projected at $196.98, which is pretty exciting, closing in on that $200 mark. And looking at value, $72.82 portfolio value, so well above $7,000, and I'm sure pretty soon we'll be at $8,000. And average 5-year dividend CAGR up to 7.9%, which I'm very excited about. Something like that is where I would like to try to sustain the portfolio for a longer period of time. So like I said at the beginning of the video, I started this portfolio in Fidelity, or this account in Fidelity, in October of 2020. So it's been about 3 years. So we finally have some 3-year data, and we can compare the performance of this portfolio to the overall market, which we'll be using the S&P 500 for this example. So over the past month, the portfolio is down about 1.5% versus the S&P, which is down over 2%. For the past 3 months, the portfolio is down about 6% versus the S&P, which is down over 8%. Year to date, the portfolio is only up about 1%, 1.3%, while the S&P 500 is up 10.7%. And then over the past year, the portfolio's up about 6.75%, while the S&P 500 is up about 10%. But when we move out to 3 years, the portfolios had a return of about 14.5% compared to the S&P 500 of 10.4%. So that's really exciting to see, and I think we can kind of use this data to understand a little bit more about the portfolio. We can see in the short term, while the market has been generally going down and kind of struggling over the past few months, the portfolio has actually been outperforming. And then over the last year or so, when the market has been generally going up, in that time frame, the portfolio underperformed a little bit. But over the past 3 years, we can see definitely outperforming the market, which is really exciting to see. It'll definitely be more exciting to see the 5-year time horizon. And hopefully we'll get some more up markets in that time to kind of see how the portfolio compares during those periods of up markets, and maybe it can do a little bit better in the future. I'm not sure, but I think 3 years is definitely not quite long enough to be a long enough track record to be completely confident or sure of what you're doing. Surely over any time period you can really get lucky, but it's harder and harder to do that as the time period stretches out. So I think 5 years of data will really give us an idea of how we are ultimately performing versus the market. And if I'm able to outperform the market over 5 years, then I'm at least somewhat confident that I can do it over a longer period of time. 3 years is definitely a good sign that we're outperforming, but it's definitely not quite long enough to give us a ton of confidence, I would say. But overall, like I said, I'm pretty happy with the way the portfolio is going. And I think, some people would be probably hesitant to have, 30% in one sector like tech, but tech is a larger part of the overall market, first of all, and also it's just those companies right now are the companies that I see value in. So that's where I've been putting my cash. And, at some other point in time, there will probably be some other sector of companies that has more value and more possibilities. So that's where I'll be putting my cash at that point in time. And so that, sector might get a little bit, overweight versus the long-term kind of averages of the portfolio. But I'm sure as the portfolio gets bigger, those kind of allocations will balance out a little bit. And also, I'm contributing, I would say, generally large amounts of capital versus the portfolio's overall size. So right now, the portfolio's about $7,000. If I'm contributing $400 a month, that's over 0.5% or over 5%, I mean, of the portfolio's value. And so if I put all of that capital into one stock for the most part, or most of that capital into one stock, then it's going to kind of skew the allocation a little bit. So I think it's kind of a combination of all those things. But like I said, because of those reasons, I'm really not too worried about that lack of diversification and concentration in the tech sector right now. So as always, I'd love to hear how your guys' portfolios are doing and how they performed the past month. If there's any big changes you made, like any big buys or sells, always interested to hear that. And if you have any suggestions for my portfolio or things you think I should do, I'm always open to hearing that as well. And if you haven't already, feel free to join the free Discord server that I have, just to chat with other long-term investors on a day-to-day basis. And thank you for watching to the end of the video. I really do appreciate that, and I'll see you all in the next one.